Okay. Hello, guys. Very good evening. And yes, hello. I'll just put up a hello for everyone who joins in. Okay. Okay. Yes. So, hello, good evening, everyone, and welcome to yet another session of Market Insights APAC, brought to you very much exclusively, right? So, yes, very warm welcome to everyone. I shall begin now. So let's see if a few people join in as well. Let's wait for them. Then we will start our very interesting session today. If my audio and the screen is completely visible, just put up a yes on the chat box so that I know that everything technically is fine from my end. Okay. Yes. So audio is okay. Thank you very much for putting it up. I suppose Market Insights, the logo is also visible. So, yes, so let us begin now. Today's session is going to be extremely important from the perspective of those who are going to, uh, actively trade in the market, those who want to trade actively in the market. Let me just sort this out. Okay. So, those who want to trade actively in the market, who are day traders, who are focusing on making their own money, who are not passive investors, and those who want to get, yes, and today's session is going to be extremely helpful to everyone. I suppose no matter where you come from, no matter where you want to go to, what your goal is, even if you are a fundamental analyst, even if you are a retail trader, even if you are just looking for an investment purpose, the stock markets or the financial markets as a whole, if we are looking at a time frame that I'm going to make you understand in the coming sessions, what is time frame, what is time horizon, what is investment horizon, how all of these three are interlinked with each other, what exactly is to understand from the perspective of trading, right? So there are a lot of traders, there are a lot of people who want to trade, who want to understand trading as a discipline, right? I would call it a discipline, not just a study, not just an analysis, but it is a complete form of art. Okay, first of all, it is an art, and second of all, it is a discipline. Discipline in the sense, I suppose, okay, yeah. So discipline in the sense that before a person can call himself a technical trader or a day trader who uses technical analysis or something of that sort. So if you use that particular you know label to your own name, that means you are somewhere linked to the markets and somewhere you want to earn from the markets, and markets are way simpler than what most of the analysts or most of the media houses or most of the people out there are making it seem. Okay, so this is somebody who has got the boldness to say this would say to you on your face, and that is what I'm doing here. It is not against anyone or contradicting anyone, but the thing is, uh, investing or day trading or retail trading or whatever it is has its own risks, right? But still, it is manageable. Okay, if somebody says that it is not manageable on your own, then probably he is wrong, or probably you are in the wrong company, right? Although I have encouraged you for trading, I have in a sense I have encouraged you to learn trading more than trading, right? So I just wanted to confirm one particular point from my side, that the discussion in this video and the previous videos that we had is purely educational, okay? And in no manners, even if I said something, relating to take a long position here or short position there, even in that case as well, it was just for teaching you guys educationally, and it was in no manner a direction for trading, okay? Any instrument that has been shown on the charts, in the form of charts in this video and the videos that I did till this point in time, are completely random, and they are meant for educational purposes only. We did one commodities wala process, okay? We did one commodities market, but still we are here to discuss something, uh, a form of art, a form of discipline, a form of education. As much as we went to school, we learned science, we learned maths, we learned commerce, we learned economics, or whatever we learned. So those were also disciplines, and as such, what we are doing here is also learning a discipline, okay? There is no difference between learning in a school, learning in the college, or in a university, getting a degree out of it. But here we are learning financial education, and that is what I meant to say when I said that a lot of people may be misguided that the sessions that we are conducting here are a form of hint to trading. No, absolutely not. We are just focusing on theories, we are focusing on a lot of conceptual learning of something that is completely and extremely powerful, and also a lot more sense would be made if people understood it the right way. So that is what it is. And today's session, obviously, as you have learned, in the previous session also we did advanced charting tools, and it was an outstanding session, I would say. We tried to complete many charting methods in the previous session. If you are not watched that session, you can go back on this particular channel's playlist and you can find it there. Today is the second part of that session, that is the advanced charting tools part 2. And as we had discussed earlier, today's session is all going to be about Heikin Ashi. Yes. Hi everyone. Okay. So today's session is going to be completely about Heikin Ashi. What is Heikin Ashi? This is the first time you might have listened to it, or maybe you had some form of an exposure to this particular charting method. Maybe, or maybe not. This particular session is for everyone, right? Be it a beginner or be it an advanced trader. If you are an advanced trader, you are already accompanied with the charting method, say for example of Heikin Ashi. But still, you will get a very good revision out of it, because today we are going to go very basic into it, okay? And Heikin Ashi are supposed to be basic, and what it says to us and what it presents to us is an outstandingly simplified information of the market itself, okay? So if somebody says that Heikin Ashi is an advanced charting method, obviously it is, but it is not based, or it is not supposed to be complicated. It is supposed to be extremely simple in order to understand it, okay? I suppose I just want a confirmation if you can see the screen right now. You can just post it on the chat box whether you can see the screen, okay? So this is the uh, presentation today, okay? Okay. So advanced charts, charting tools, charting methods, whatever you want to call it. Uh, This is our agenda today. Now, who is Homma? Story of Homma. Homma was an outstanding person. I suppose I had mentioned his name previously in my videos as well. One outstanding guy in the history of trading, I would say. Because today people are more and more people are getting into trading, and people are getting into financial education. Okay, just pardon me. There's a small mistake here. I'll sort it up. Okay, yes. So Homa, right? Yeah. So Munehisa Homa was a person who discovered Heikin Ashi, and he lived somewhere around in 1700s, 1800s, and somewhere in that particular era, he found out the Heikin Ashi charting method, and he was what is his story and what he did in order to become a trader, and what was the process of him finding out or discovering this particular uh, exceptionally outstanding tool of understanding markets, of understanding trends, and where the momentum is, how the momentum is slowing down. Every single thing is captured in the form of Heikin Ashi charts. So, what is Heikin Ashi? Why am I saying its name again and again? It sounds disturbing. Heikin Ashi, right? But it is a wonderful tool for those who are beginners. For those who are beginners who don't know much about charting methods, okay, who don't know much about Heikin Ashi or point and figure or line charts or whatever we have taught till this point. They want to know more about how to day trade, or say for example they want to know more about how to understand the levels, understand the momentum of the market, understand where the trend is. Then Haikinashi is the way to go. And in the previous video also, I kind of told every one of you that Haikinashi is such a chart, it is such a chart that once you go and use Heikin Ashi into you plan it accordingly, and you kind of accumulate it, you understand it, and you apply it in your trading plan, in your trading systems, and you look at Heikin Ashi very much frequently, then there will come a time that most probably you will leave Japanese candlestick patterns behind. You will never ever try to see the Japanese candlestick, okay, back. But that is one of the most outstanding advantages of Haikanashi, the way it is representing the price information, the way it is representing the trend itself through its visual representation, right? So that is the advantage of Haikanashi. But the problem is we think that this is a gamified version of candlestick. Okay, now if we go forward, let's see. Okay, so this is a normal chart, and this is a Heikin Ashi chart. Okay, this one looks way more organized. This is green, this is red, this is green, this is red. I know where I have to buy, where I have to sell. Okay, okay, so you can understand where I have to buy, where I have to sell. But the thing is, Heikin Ashi is supposed to be a complementary method. Okay, that is what most of the major traders, most of the advanced traders won't tell you when they are discussing Heikin Ashi. Okay, this is one of the most important things that one must always remember, that Heikin Ashi is just a complementary tool. Okay, it is not a complete, I would say, replacement for basic candlestick chartings. Okay, what candlestick charting does is it provides accurate information. It does not play with the information of price information, right? It does not play with the closing price. That will come to know in the throughout this presentation as we go into. That will come into know in this particular uh, agenda. That is, how is it constructed? So in that we will discuss how is it constructed, how it looks like, and why it is important that once you come to know about Heiken Ashi, you should go back to Japanese candlesticks. Okay, okay, sure. So once you come back to the Heikin Ashi charting method and you use it in your trading plan, you will feel a reluctance inside your brain, inside your head. Your mind will tell you that Heikin Ashi is way more sophisticated. It looks very, very simplified version of price information. So why not use that and just leave everything else? Okay, that will be the uh, basic tendency of a human being. But that is what is different, okay, between a human being and a good trader. That is why in the starting of the video I said that analysis that we are doing here is a discipline, okay. So discipline is nothing but we tend to think about a lot, okay, certain things. But what we want to do and what we ought to do, okay, what we are supposed to do are absolutely sometimes different, okay. So sometimes our mind will tell you that there is a tendency to go to Heikin Ashi, to go to a simplified version of a charting method, okay. But what is correct is you access the Heikin Ashi charting method as a complementary tool to what your trading plan already is. Okay. This is something that most of the traders out there, or most of the traders who know Haikanashi or teaching Haikanashi would tell you, won't tell you mostly. Okay. They tell you that this is the only charting method that you need to see. And sometimes they are correct. Obviously, yes, there is chance that Haikanashi alone can stand for a very good trading strategy. But I would advise against it. And why I'm telling you before we start everything is that the risk factor, because being an analyst and being a technical analyst beforehand, there is a very good probability that whatever I'm teaching you guys here, whatever I'm doing in my life, there is ethics related to that. Okay. Our profession is all about ethics. Sometimes people tend to kind of throw the ethics out of the window, but that is not the way I do the work. Okay, so I kind of make people aware of the risks first, and because obviously market is market, no matter how good your trading strategy is or no matter what it is. Okay, everybody used to think that what a good rally is going to start till the start of March of 2020, and everybody knew okay, this particular disease is happening somewhere in the remote corner of the world in China, and nothing is going to happen. Everything is going to continue. People hogging on to different stocks, people hogging on to different commodities, but yet nobody could predict that such a thing could happen on a global scale, where every single person's life, let alone the whole financial market, your even personal life will get impacted by that particular thing. So markets are extremely risky, but still there is a way to understanding markets, and that is what we are going to do today, right? Like we are doing. Later on, we will go on to the market and we'll see the charts. We'll see how Haikanashi chart looks like when compared to other types of charts, and how to generate signals. Okay, this is completely and purely educational. Okay, you don't have to rely on my information whatsoever for trading. Okay, that is what I'm saying. And let's begin. So Homa, obviously outstanding person, lived somewhere 1724 to 1803. He is you won't believe that such a trader existed. If you will read the history of Munehisa Homa, you will come to know that he was such an outstanding guy that everybody in Japan used to he was basically a rice trader. Okay, like today we are trading on a terminal, right? We are going on a terminal, we are logging into it, and then we are, because of the advancement in the technology. But previously what happened was there were marketplaces, okay, that acted as a stock exchange. Okay, there were receipts, there were buying receipts, there were selling receipts, and something of that sort happened. Exactly what today's virtual terminal would give you a feel of, exactly that happened in the real life, in a real place with real people. Okay, so he was a rice trader of Japan in 1700, somewhere around this particular timeline, and he became so much powerful. He had such a great mind that he founded the candlestick charts. Not only that, he founded the Japanese candlestick patterns. Most of the patterns that are today, that we have learned in the previous videos, I suppose that is on the channel as well. If you haven't watched it, you can go through it and find it out. Apart from that, yeah. So Munehisa Homma, so rice trader of Japan, but he was such a powerful and popular trader that time, at that period, that everybody in Japan, not only in his place, where I suppose somewhere around in I'm really sorry, I'm forgetting the names. Somewhere in Japan, okay, the place starts with O. I don't remember the name of that particular place because multiple places have names starting from O. I suppose Osaka, Okinawa, somewhere around there. He was operating from a particular marketplace, but throughout Japan, he was known as the god of the markets. Okay, he was supposed to be so good that people came to him to learn and understand what he is doing. Okay, within his lifetime. So that particular feat of his is commendable, and that is why before learning anything, we must provide that particular credit to the person who invented it, and that is what we are doing here. So kudos to this person, and we will always remember his name, Munehisa Homma. He did found out the candlestick charts, the candlestick patterns, and Heikin Ashi charts, apart from a few other tools as well. Okay, so let's begin. The what is Heikin Ashi charting method? Okay, so Heikin Ashi in Japanese means average bar. Okay, now why average bar? That will come to know. Just give me a moment. Yeah. So Haikinashi in Japanese means average bar. Average bar is nothing but taking averages like we did in somewhere in maths, right? Back in school, back in high school, back in wherever school. Okay, we did take out averages, right? That too we will try to do if time permits. We will try to do one exercise and we will try to construct Haikinashi chart by ourselves. Okay, so average bar and it captures the formula and construction of these charts. Okay. So the overall formula that is going into the construction of an Heikin Ashi candle. Okay. That all is summarized in this particular word, average bar. Okay. Next, it is a powerful method, very much powerful. Okay. So much powerful that it is almost addictive. Okay. And that is why I kind of tried to give you a risk disclaimer at the start of this video, that it is very powerful, it is very addicting. That is why you need to be very, very careful with your own conscience before using Haikanashi. Okay. So in Hindi, I would like to say that Haikanashi charting method बहुत कमाल का मेथड है. एंड काफी बार ऐसा होता है कि ट्रेडर्स समझ नहीं पाते. ओके, और मल्टीपल पोजीशंस ले लेते हैं हाइकनाशी चार्ट को देख के, क्योंकि हर जगह पे चार्ट दिखा रहा रहता है, पोजीशंस हर जगह पे रिवर्सल दिखा रहा रहता है, हर जगह पे कुछ ना कुछ दिखा रहा रहता है. ठीक है, तो ओवर ट्रेडिंग से जो नुकसान होता है ना, वो एक पर्टिकुलर ट्रेडिंग प्लान को समझने में, और इवन अगर मैं सोचूं और मैं बोलूं कि एक मैंने समझ लो ट्रेडिंग प्लान बनाया है मूविंग एवरेजेस का, राइट? मूविंग एवरेजेस का प्लान बनाने के बाद भी एकदम सिंपल, सबसे सिंपल अगर मैं प्लान बना रहा हूँ ट्रेडिंग का कि दिस इफ दिस पर्टिकुलर मूविंग एवरेज गोज अबाउट दिस मूविंग एवरेज और द प्राइस व्हाटएवर, then I should buy, or then in the vice versa situation I would sell. Okay, that too won't be bad than over trading using Haikanashi, right? तो हाइकनाशी से जो ओवर ट्रेडिंग होती है ना, इंसान का ग्रीड जो है कंट्रोल में नहीं आता है कभी कभी, और मल्टीपल पोजीशंस लेने का मन करता है, बिकॉज हाइकनाशी इज सच अ पावरफुल टूल. सो वो ओवर ट्रेडिंग की वजह से आपका पहली बात तो रिस्क कैपिटल समाप्त हो जाता है, कम हो जाता है, खत्म हो जाता है. ठीक है, आपके पास नई पोजीशंस खोलने के लिए या अपनी करंट पोजीशन समझ लो पलट गई या कुछ इशू हो गया, तो उसको फिलअप करने के लिए आपके पास कैपिटल नहीं बचता. ठीक है, ये पोजीशंस कई बार देखी गई हैं, कई कई ट्रेडर्स के साथ में हुआ है ये. इसके लिए बहुत सारे जो एडवांस ट्रेडर्स हैं, दे डोंट रेफर टू हाइकन आशी. ओके, they refer to it as a complementary tool, right? They look at the candlestick and they look at then the Heikin Ashi, and then they interpret okay, where we are standing right now in the market, where the market is standing. Okay, तो ये बात होती है, यही चीज मैं पहले समझाना चाह रहा था, राइट? मेनी पीपल वुड से कि यार ये बार बार डिस्क्लेमर क्यों हो रहा है, राइट? दैट माइट बी वन ऑफ द केस in your head, because I'm saying the same thing again and again and again. It sounds repetitive, but that is the way I wanted to. That is the only concern that most of the people have. Okay, let's go forward. So, how Heikin Ashi constructed? So, what is the construction method that we will see on the chart as well? But just remember that open is the average of the open and closing price of the previous day. ठीक है? Previous day या previous candle. तो हम अगर 5 मिनट का कैंडल पे हैं, 5 मिनट टाइम फ्रेम पे हैं, तो 5 मिनट कैंडल जब एंड होता है तो उसके ओपन और क्लोज का जो एवरेज निकलेगा, राइट? नाउ हाउ इट इज एवरेज, सर? सो लुक एट दिस ग्रीन कैंडल, राइट? ऑलमोस्ट इन द मिडल द नेक्स्ट कैंडल इज स्टार्टिंग. ओके, मिडल क्या हो गया? एवरेज हो गया, राइट? ऑब्वियसली मीन इज मिडल. एक डेटा सेट का बीच का पार्ट, बीच का पॉइंट, उसी को तो एवरेज बोलते हैं, राइट? सो वो मैथमेटिकल नहीं है, वो लॉजिकल इंटरप्रिटेशन है एवरेज का, right? And that is why averages are very important from a mathematical perspective and statistical perspective, right? And that is why many people say that moving averages are very, very effective in the market, even though they are very basic. Almost everybody uses it, right? Almost everybody knows it, but still they are very effective moving averages, right? So open is the average of the open and closing prices of the previous day or the previous candle. So this is the previous candle, almost in the middle of this open and close. Remember, this is open and close, not the high. Okay, not the high. High से नहीं calculate. ये जो ऊपर में wick दिख रहा है ना, shadow, that is the high का candle, right? High का wick, but that is not counted in the calculation of open. Okay, what is calculated is open price. That is this one. It is a green candle, so open is at the bottom, and the close is up here. So close plus open divide by 2, that is going to be the open of the next candle. No matter in the candlestick chart pattern, अगर वो हम जापानीज कैंडलस्टिक चार्ट पैटर्न में देख रहे हैं और सोचो गैप डाउन ओपनिंग हुआ है यहाँ पे, ठीक है? द prices have come down, directly opened somewhere here. It doesn't matter to Heikin Ashi. Okay, that is why it is smoothening the whole system. I will show it to you on the price chart. It will make more sense then. Okay, apart from that, high and low prices are the same as HL, high low on ordinary candlestick patterns. But remember that sometimes these wicks are not appearing. Okay, in the red candles, the upper wick is not usually seen. Not usually. Okay, remember this word. Not usually seen in red candles, and in green candles, not usually are the lower wicks seen. Okay, so that is the scenario in Heikin Ashi. But however, high is this one, open and close is this one, open and low is this one, close is this one. Okay, in this scenario, close का जो formula है, that is a bit interesting, because close का जो average निकालने का formula है, the closing price of the current candle, it is kind of sometimes it is inflating that price, and sometimes it is deflating the price to make it a smoother version of the price chart. Okay, what we do in the case of finding out the closing price is that now I will show it on the chart. Okay, no worries, I'll show it on the chart. So let's see a comparison of what is happening here. Okay, yeah. So this is the scenario of a normal candlestick chart. Okay, there are multiple gaps here. Okay, yeah. Okay, so there are multiple gaps. Look at this gap, and then this gap, this gap, this gap. Okay, multiple gaps are there in the candlestick chart because it is providing us the accurate open, close, low, high knowledge. Okay, it is providing us accurate information of open, high, low, close. Okay, but look at this. Okay, just observe it for some time. Just take a picture from your brain. Just take a moment to capture this particular photo. Capture this photo in your brain and just look at where the gaps are. Look at where the gaps are. Okay, all these gaps are forming. Okay, these gaps are forming. It looks very unorganized, है ना? It is not very pleasing to the eyes. It is how it is appearing. It's appearing to be very, not gamified, not very good. Okay, there is no symmetry in here. There is no form of an attraction in this chart. Okay, but suddenly I change this, and voila, what is this? This is a very, very systematic. There is symmetry in this. There is so many things in this. Okay, reds are particularly segregated from the greens. Okay, these red, these green, these red, these green, these red, green, two reds, green, single red, kind of a doji kind of a thing. Okay, then again, and then red, green. So where is the utility of this particular chart? Okay, where is the utility? Now we know that this is the top that has been hit. Again, the same price is hitting at this particular level, and that is why it is facing somewhat of a resistance. Okay, when you see this chart, it seems very choppy. It seems less organized. It seems less gamified. Okay, this appears to be very much okay, because I know once the chart turns red to green, I have a potential buy signal. Okay, I will buy at this, I will long at this position. And once it turns red, I have the time to get out of my position or increase my short position if I have not taken something. Okay, and then it comes down all the way back here. Then again, when it turns green, it comes up. Okay, I take a long position. Then it turns red, I take a short position, right? So this is what is happening. But when you see closely, look at this high and this low. Look at this mountain shape and look at this mountain shape. Okay, okay. Now, how small are the candles? What is the volatility? Almost zero on this day, right? Almost zero on this second green candle. But this the volatility is appearing to be extremely high. If you have come from a perspective of understanding candlestick charts, okay, you got an understanding of candlestick charts, and now you are applying that same logic, same understanding on Heikin Ashi, then you, my friend, you have some revisiting or some learning to do. That is what happens when new traders who learn about Heikin Ashi, they go on to Heikin Ashi and they try to find out how to make money out of it, right? That is the basic agenda of every single person out there. But this is the way the Heikin Ashi can dupe you, okay? Because this somewhat feels that here the trading has happened in this price range, the trading has happened in this price range. But what has happened? Nothing has happened in this price range. Okay. Direct gap down opening. If you put a limit order, your limit order, whatever it is not going to be executed at all. Okay. Directly the price will push down and it will open here and it will go all the way down. Okay. So you what happened to you? Nothing. That is why I'm saying that Heikin Ashi is just a complementary tool. When you see this, it doesn't mean that there are very volatile candles here. Look at this. Oh my god, such a big candle. It makes no sense. It is a big candle, however, but it is the end of the trend. Okay. There is no more masala here to be churned out. Okay. There is no more money to be made. Now there is a small, choppy session and then the price goes up. Okay. But this is the scenario. Somewhat here, you can say that this is a morning star kind of a thing, kind of a doji star, I would say, right? Not doji star, but somewhat of a very, very bearish signal, very very bearish signal. Okay, at this particular candle. But what happens at the end? A very huge gap down opening. Okay, this is the live chart. Okay, this is live chart. I've taken a screenshot. And this here, it seems everything is fine, everything is jolly. Now this red candle is, oh my god. Okay, this red candle appears to be a green candle in here. Okay, everything seems jolly and everything feels all right. But then a gap down opening, you might have taken a trade in this candle. Okay, in this candle. Okay, somewhere here, and you were very happy waiting for two candles forming upside, very good bullish, and you are in the profitable range. Okay, you forgot to put stop loss, and boom, using my Heikin Ashi, you saw this. The next day, the opening was somewhere here. The opening is here, but actually the opening is somewhere here. There is no prices that are being traded in this region. All your profits are wiped off. Okay, this is this is the situation while using Heikin Ashi. Okay, now let's dive deep. Okay, I suppose everything is all right. The technical things, the audio and the video are visible. Just put a thumbs up if everything is all right. Okay, so stop the screen and then we'll jump on to the charting methods. Okay, okay. So this is visible, I suppose. Please, oh, yeah, all okay. Okay, good, nice. The chart is visible, I suppose. Yes. Okay. Yeah. Now I want you to see this particular chart, no matter what instrument we are working in, be it stocks, be it bonds. Okay, don't worry. Everything can be turned into a price chart, and everything can be analyzed in the way, but in the same manner. But the problem is sometimes there are certain instruments that cannot be analyzed in such a manner. Okay, there is somewhat of a external knowledge required in that process. So this is a Heikin Ashi chart. Okay, you are very much, I would say, happy that you came to know something new, and you were out there searching for a new method to start making money, start earning money. Okay, this is the daily chart. Just look at this chart and tell me what a wonderful position here. Here, what a wonderful position has been created in this particular situation. Now, what a wonderful day when I shorted in on this day. Such a huge volume, such a huge volatile candle. The next day is also a huge volatile candle. Next day is also a huge volatile candle. Right? Note the dates that is coming on this timeline somewhere here. 18th of April 2022, 19 and 20 April. Switch it to the candlestick. 18th of April. Where is it? Where is 18th of April? Show it to me. Where is the 18th of April? Tell me where it is. Isn't it? Can you see this? Can you see this? There is no trading that has happened in this particular zone. It appears as if Heikin Ashi has given us a wonderful thing, but look at this, right? So that is why the risk advisory was in effect in the start of the video itself, and that is what it is. Okay, somewhat somewhere in the past, one of my very very, very very dear friends, uh, and my mentor, I would say, yes, and somewhat of a genius. He told me one thing, that market is nothing but managing risk. If you can manage risk, then you can earn money in the market. Otherwise, everybody is doing something. Okay, everybody has a different goal. But the basic fundamental idea of market, which no one will tell you, I will tell you, no one will assume it, and they will say that, wow, this is a wonderful technique, creating clickbait titles and telling you guys that I had earned 900% gains on a single trade. Yes, it is possible, but at what cost? At learning cost. 13th of April, we have seen 18th of April. Where was 18th of April? This was the 18th of April. Okay. Where is the opening price? Somewhere around 1764, right? Okay. Where is the opening price on this one? 18th of April. Look at the open here. It is not visible. Okay, 1605. 1764, 1605. That is the difference. Okay. So the problem with Heikin Ashi is that it never works on the current market prices. It averages. That is the problem. Okay. If it is averaging, then you don't know where the current market price is going on. Okay. Where it is actually happening. Okay. So another thing, somewhere around this instrument. Let's see what's happening in this instrument right now. Okay. Yes. So we had come out of a trend. Okay, this is a trend we had drawn in the previous videos also. Okay. Give me a moment. Stop the screen for some time. Okay, I'll just okay. Yes. So back again to this. People were ecstatic that we have come out of a very slumber wala part. Okay, at a position where nothing was economically making sense, and I would say it was making sense till this point. Okay, 14th of November. After that, what is happening in the market, I just don't understand what is happening. Okay, people are just straight out buying, straight out selling. There is no pattern in that. From just talking on the mere sense of the price chart, there is no sense in this choppy session. But when you go into the news and you see the news itself is confusing. Okay. That is why the market is also choppy. Okay. So this is the reason why we have got such a jerky session. I would say going down, then coming up, then going down. Low volatility days. Even if trader is good, then also he's not able to understand where to take, where to exit. Right. Such a thing is happening currently in the market. So such a moment has happened, but fortunately yesterday I gave some levels to my team, and those worked out excellently well. I would say the upper level was hit, and it came down such a fantastically. Somewhere around here, 63 was prediction. Somewhere around 63 would be the level. I guess I have got that particular thing. That is okay. Horizontal ray, not horizontal line. Somewhere around this. Okay. 63. Let me just open that document up so that I can show it to you. Okay. So the volatility is obviously low as compared to other days because the base effect was very high. Okay. We have seen highly volatile days, one sided days, bullish days. Okay. In the previous session, in the previous week. And currently we are witnessing a very choppy session. Okay. So currently what is happening in this particular instrument is that the volume is also coming, but it's not showing. Okay, no worries. So this was the level, and I would just switch it up. I'll show it to you how we provide different things here. Hello, hello. Oh my God. Okay, okay. There was this big blunder. I've been explaining all the way, but the microphone was not switched on. Oh my God. Oh my God. Okay, no worries, no worries. We'll just get back to what we were doing. Really sorry. That is why you need to just comment and poke me at times. 6:19, right? Now it's almost 4 minutes, 3 minutes. No worries. We'll just get back to it. Okay, I suppose now it is audible because there is no button that shows me that whether my voice is going out on the channel. That that is one of the technical issues here. Yeah. Yeah. Okay, then let's switch. This one is not supposed to come out. Thank you for understanding, yeah, Viswajit. So no worries. So what I was explaining is the difference between Heikin Ashi and where to keep our profit and losses and whatever it is. Okay. So first we look into the candlestick pattern. This is a very good engulfing pattern. However, if we are not very much sure about it, you can go back to the Heikin Ashi chart. It's a spinning top here. That means the reversal is round the corner. What does that mean? It's time for a shorting. Okay. Shorting has happened. Okay. We can take it as long as you want. But the problem is with Heikin Ashi, when certain green candles appear within a red zone, this is a completely red area. Okay. The whole downfall is a red area. But in between such spinning tops occur. Now, how to handle these is to look back to the candlestick chart. In this case, every candle is a red candle. Apart from these two candles, apart from these two candles and these three candles, somewhere around, the overall thing is a very steep movement of bearishness. Okay, but the problem here is when we turn to Heiken Ashi, somewhat of our anxiousness is taken out of from our head. Okay, what we think that it might reverse from here, let us take our profits and get out of this position. But what happens to this whole move? You are completely getting out and you are losing all this speculative money. Okay, you have taken a very good position here. Why to stop out and get out of this particular position? Instead, what you do is you bring your stop loss all the way down here, somewhere here. What many traders do is they bring the stop loss to the break even point. Okay, break even means the place they took a position and the spread. They calculate the spread. Where exactly will their net profit will be nil. Okay, the net profit will be nil at that particular point. They bring their stop loss. That is called trailing stop loss. Okay, we'll just put it up. Trailing stop loss is an outstanding method of controlling losses, managing risk. Okay, this one you bring it here, somewhere here. Okay, and then let the price flow back down. Okay, another important point that you can do is now it is audible, right? Everything is audible now. Okay, okay, thank you. Yes, I have to come when I switch to the chart. It is completely chart. Okay, I cannot see the chat box. That is one of the issues here. And apart from that, I cannot understand if my voice is going out or it is being broadcasted or not. That is again another problem. So no worries. We'll just get back to what we were doing. Yeah. So sometimes you can do this, or sometimes what you can do is you can average your profits. Okay, what is that? What is cost averaging? What is profit averaging? Is that you basically take half of your position here. you, if you have shorted here, you buy half of the position here. That means you have closed half position here and then wait where the price is going. If it goes down, then good for you. If it comes up, then already you have booked a profit and still you have time to arrange your stop loss in a manner where you can get out in good amount of without any risk you can get out. So this is another problem. This is another tactic that you can use. So Heikin Ashi, trailing stop loss, and cost averaging, the profit averaging that I showed you. Apart from that, let us see something else. Something really troubling, okay, thing. Let's turn to daily, because okay, this one was something I did. Yeah. So again, a very good spin top, a very good position. What is this day? Friday, 4th of November. Let's see. Friday, 4th of November. Now look at this candle, almost a Barugozu, a bearish, outstanding bearish signal. Okay. And look at the Heikin Ashi. It looks like all the food has been eaten by the candlestick. Okay. And this guy was starved to almost malnutrition, right? That is the thing. Okay. That is the difference. That is the basic idea behind Heikin Ashi. That when you average, the actual price information is hidden, it is smoothened. That is why there is a lot of problems when it comes to mathematically arranging your trades, okay, in numbers. That is the problem. So this is Haikanashi. The open and close, look at this. Open and close is 111.79, close is 111.737. When we convert to actual price information, the open was somewhere around 112.84. The close is around 110.65. Right? So that is the difference. $2 difference, and yet we get confused. Okay. But I already showed you how to generate the signal. If you look at this particular thing, a very good spinning top with almost no real body, almost like this. This is the ideal position. This is not the ideal position. Even though it looks that the trend has changed, I would not trade this position. Again, this is a tradable position, but yet again, we have to check the candlestick. 13th October, right? 13th of October. Look, good amount of bearishness, good amount of bearish movement afterwards. Okay. And the high somewhere, look at this. The high was touched. Okay, so if you keep your losses stop loss, it will get hit. That is the problem. 18,826. High is 8. No, it won't get hit because there is a 10 pip difference, 1 pip difference, I suppose. Look at this high and look at this high. Your stop loss won't get hit if you are keeping it at the high of this candle. So again, a good position, very good position from the perspective of trading. Uh, let's get back to Heikin Ashi. All the shorting opportunities we have seen. Is there any buying opportunity right now? I don't suppose there is a buying opportunity because I know the other factors that is working in the market. Okay, the economic news that is working in the market. So just to give you guys a very good, you know, uh, heads up throughout for this week, we have already completed our session. The time is up, but I will again take out some of the time to show you what is going to happen in this week, and what is important this week, and how to trade, what to expect from the market. So just wait a second. Just hold on. Okay. Bear this time with me. You have been an excellently patient audience, even though my microphone was not working. Then also you were attached to the whole screen, right? Thank you very much for that. And just where is the thing? Calendar. Yeah. Okay. This one. Yes. So what to expect this week? Obviously, a lot of things. Almost this week is very, very important from economically, fiscal, from the fiscal point of view of a lot of countries. Okay. So first of all, Canadian JDP will come out today at somewhere around 8:30. Obviously, the expectations are very low, because of the obvious reasons, because of the obvious crunch in energy sector, because of the obvious crunch in the manufacturing sector. So I would say that there is a chance, there is a good chance that it would be under pressure, but I don't suppose so. looking at the current situation of Canada. Next is the position of again, this all of this discussion is completely and purely educational. CB consumer confidence is coming out. Okay, that is important. Consumer confidence will dictate what is the behavior of the people and what is the reaction of the consistent rate hikes on the people's mindset, whether they are willing to buy, whether they are willing to spend or not, right? Somewhere around tomorrow, it will be ADP non-farm employment change, a precursor to the NFP data that is going to come out on Friday. Okay, so this data will give us some hints. Some form of a volatility will be there in the market. Prelim GDP, very important from the perspective of what is happening currently. Prelim GDP will be seen by a lot of traders, and it will surely highlight, and it is somewhat expected to be higher than the previous one. So let us see what's happening, what will happen. Jolt job openings, okay, that will be under pressure again. Chair Powell speaks somewhere around when it is, okay, tomorrow only. So that is going to be an important event. Many people will be looking forward for some hints of what he is doing. Currently, he has made no remarks as such. His own strategy, his old strategy is the current strategy only. There is no moving out from rate hikes. So he's saying that there is no way we can go back to slowing this tightening, okay, or to phasing out of the interest rate hike cycle. So that is another important point. His comments will be extremely important from the perspective of understanding what is going to happen in the US market. Correct? Then the CPI data of Swiss franc, right? Later on, PCE. Now, this is something that I have been waiting for very, very eagerly, even though it says that it will be somewhere lower than the previous one. But I don't suppose so, because a lot of factors are working. A lot of, even though the rate cycle is there, because this particular week, this particular month has been a festival month. So I suppose the prices will be higher, and let us see what will happen. Employment claims, important data. ISM manufacturing PMI, okay, but it will be under pressure. Okay, USD overall will be under pressure in this particular week, especially after this data, core PCE. Okay, this data is the pivotal point. Okay, so you have to keep an eye out for that. And obviously on Friday, everything will be in perspective when we see the labor market, where it is, what it is doing, average hourly earnings, non-farm employment change, and unemployment rate. Everything will be under a perspective, and we will then be able to understand what is going to happen in this particular, in the next month, in the coming months. Okay, so yes, thank you very much everyone for joining in. Take care and happy trading.